Hi, everyone. This is Christine Kopr from Sotheby's International Realty Canada in Vancouver, BC, with your April 2024 market update. The stats are in, and we're going to take a look at where the market was at the end of March. We're going to have a look and see how the real estate market in the Greater Vancouver region fared. Plus, we're going to take a look specifically at Vancouver West Side and East Side, detached and condos and townhomes, and take a look at how the inventory and pricing is looking for those specific sub-segments. As you know, we specialize in Vancouver West and East, and so we're going to take a deeper look into that, as well as what's happening in the market with these upcoming mortgage interest rate decreases that everyone has been talking about, and do we think that those are actually going to happen this summer? All right, we're going to take a look at our graph that we look at every single month that shows you how are sales doing, how's that in comparison to the new inventory, and how does that look in perspective with the total amount of homes that are available for sale right now in comparison to the demand, which is our total sales. In March, we did 2,415 sales. That is up 17% month over month. So it's a nice increase from February of 2024. However, it is down 5% year over year. The sales this spring are not as strong as they were last spring, and sales are down 31% from the 10-year average. So it's actually somewhat been on trend with respect to sales. New listings came in at 5,002, so that's up 10% month over month. And with respect to new listings year over year, we're up 16% from this time last year. So we have a bit more inventory. We're starting to see that it's coming on the market. There is good demand out there. There's a lot of action that's happening. Buyers are back into the marketplace. With respect to new listings coming on the market, they're down 10% below the 10-year average. So not as many listings coming on in March as we would expect for spring, which is the most active market that we have. Active listings, that's the total amount of listings available for sale, which spans from Whistler all the way to Maple Ridge, 10,552 sales. That's up 10% month over month and up 23% year over year. Total amount of homes available sale is also 6% above the 10-year average. What I like to look at every month is months of inventory, MOI. And if you followed me before, you know that 4 months and below of inventory, total inventory divided by sales gives us our months of inventory. And if we only have 4 months of inventory or below, that's considered a seller's market. There is more demand than there is available inventory, and therefore we would sell through that inventory very quickly, and usually over a sustained period that reflects in upward trend in prices. Between 4 and 6 months of inventory is considered a balanced market, and 6 months and above of inventory is considered a buyer's market. There is more inventory than there is demand. It starts to accumulate and creates downward pressure on prices. But have a look at March's months of inventory. We're sitting at 4.3%. We are on the cusp of a seller's market in certain segments of the marketplace. And overall, we've actually experienced a price increase in the MLS benchmark price. We are now sitting at 1.196 million for a home in the Greater Vancouver region. That's up 1% month over month, not year over year, month over month, and up 5% year over year. We had a decrease in the MLS benchmark price from August of 2023 until January, as you can see here, of 2024. And the last couple of months, we have started to see a slight increase in that MLS benchmark price. It is actually reflected in the subcategories of price increases. So it's a very interesting time to see that sales are down, inventory is somewhat increasing. However, prices are also increasing. So let's just break it down by each subsection for the Greater Vancouver market. For detached homes, sales were down 5% year over year. Benchmark price is $2,007,000. Benchmark price is up almost 7.5% year over year and almost up 2% month over month. That's a significant amount of equity month over month on a $2 million price tag. But imagine if we eventually do get these interest rate decreases in the future and we get some more inventory, what a 1 to 2% increase per month could look like in terms of price appreciation in the upcoming future, or even if rates stay flat, considering they haven't done anything with the Bank of Canada rate so far. Sales are down 5.2% for detached homes in the Metro Vancouver region. And I think part of that has to do is that there just isn't enough good inventory that people want to buy. There has been more inventory that has come on, but not everybody wants a property that needs to be renovated in this point in time. Move-in ready in a great location at the right price will sell. That is just the way it goes. And I think that we just haven't had enough of that inventory coming on. And therefore, you see the increase in the benchmark price for this type of product. The good stuff sells, the rest of it's hanging out there. Sometimes it's overpriced, or it's just the type of product that buyers aren't looking for right now. And there is definitely a premium from homes that are move-in ready, and you don't have to go through the whole contractor process and of renovating, etc. Same thing for attached townhomes. Sales are up 6.2%. So there's a lot more activity in this space. Prices are up 5% year over year, and your benchmark price is also up 1.7% for the greater Metro Vancouver area with respect to townhomes. Looking at condos, sales are down 8%. So the same thing, while we do have a bit more inventory in this space, the sales are down. And I would say that part of that has to do with just not enough product. Your benchmark is sitting at 777,000, prices up 5.7% year over year and up 0.9% month over month. While sales are down, you can see they're still increasing. There's pressure on prices going up. And I think that just has to do with the good inventory is getting the sales, and the rest of it's just sitting there. If we want to take a look at months of inventory, just so we can see how that's all working out, while sales are down, in the detached and condo segments, you can see that months of inventory for the detached market is sitting at 5.7, so on the cusp of a buyer's market. However, prices have increased. So while we're sitting in this balance to buyer's market, prices have actually increased in this particular segment. Attached townhomes are sitting at 2.8 months of inventory. That is actually a strong seller's market for townhouses. And condos, as you can see, are also sitting at 3.8 months of inventory. So while sales are somewhat down, there's also this lack of inventory for the current demand, and that is actually increasing prices. Vancouver Westside detached homes is sitting at 7.8 months of inventory, so kind of in a buyer's market. However, I would say that we've only seen an additional 30 to 40 homes that came on since the month before, so not a lot more inventory in this space. And here we're sitting at a total of 3.9 months of inventory for Vancouver West for condos and townhomes, basically sitting in that seller's market territory, while strong demand in the townhome market, a little tapering off on the condos, but it doesn't mean that the market isn't quite active and prices are increasing. Vancouver East, we have detached homes. We're sitting at 5 months of inventory, so sitting in somewhat about balanced territory. However, we have seen that price appreciation in this segment. And from a sales ratio, we're sitting at about 22% sales to listings ratio, which is the beginning of that seller's market territory. And condos and townhomes, they're staying flat at the 28% sales ratio, but looking at it from a months of inventory, it's also reflected a seller's market, thus that price increase in this market segment. And just putting it all into perspective, while we look at the changes on a monthly basis, it's quite jarring until you take a step back and you look at the trend. So you can see here going back to COVID 2020 all the way to the peak of the market that was actually the spring of 2023, previously the spring of 2021, we're starting to have a pretty good recovery. And if the trend is your friend, we're headed in the right direction. So currently, while the market isn't extremely strong, I would say that it's actually extremely healthy and it is very active. And there is price appreciation. So it's not crazy, although we have seen the multiple offers and stuff does move fast. It's not like the markets of the past. So the right product will definitely move when priced right, and other product will suffer perhaps a bit more than usual just because of the economic situation that we're in with interest rates and affordability. There has been a lot of regulation change in the market. We've already discussed all of these in terms of the changes in land transfer tax, to the flipping tax, to the extended foreign buyer ban. But the federal government has actually just made a lot of announcements. So the federal government announced a 30-year amortization for new builds that are CMHC insured. CMHC will not insure any product that is over $1 million. So this is really capped to the entry level market, and it has to be a new build under $1 million. Not a ton of that product in Vancouver unless you're thinking one bedroom or potentially two bedroom condos, and maybe more so outside of the downtown core. This will definitely help markets such as in Alberta, where you can buy a brand new house under $1 million, a detached product. So that's fantastic. 30-year amortization means that you just get to spread your mortgage over 30 years instead of 25. Why I don't think this is going to be a huge change to our marketplace is because 30-year amortizations are already available to anyone who is conventional, putting down 20%. It's not a massive change. It's just another positive in the right direction, so to speak, to make homes more affordable under that $1 million mark. Of course, it's a blessing and a curse every time the real estate market goes up. It's a real challenge for the Bank of Canada trying to manage inflation because home prices are factored into the inflation rate. There's also going to be a crackdown on mortgage fraud. So they're now talking about CRA and mortgage brokers syncing information and verifying the incomes of buyers to try to remove the bad actors from the market space that perhaps lie on their applications and secure financing to accumulate more and more properties, let's say speculators in that regard, or investors, a sub-segment of those, because obviously 99% of the people out there that are investors are buying these properties and renting them out and creating rental product for people to live in, which our government hasn't been so successful at doing. The federal government has also announced a $6 billion fund to cities that are going to allow the 4 to 6 units multiplex development on single family homes. We've heard a lot about that because that's something that our BC government has announced, but now it looks like the Fed is really trying to follow what BC's David Evy's government has been proposing to help create that densification and multiplex living more prevalent to hopefully make housing more affordable. If you walk down the streets of Europe, which I think most people will agree are beautiful, you're going to see that pretty much everywhere you go. This is not a new concept. So if you love Europe, you might actually love what can come out of this. There's ways that you can make this look quite beautiful and create more housing for a lot more people. Federal government is also following along with providing $40,000 loans to homeowners that want to create additional suites in their home for their family, multi-generational homes, or potentially investment to provide more homes for people, something that our city has already done. So not a lot of people have taken advantage of it. So we'll see if that does anything. Of course, the carbon taxes come into play starting April 1st. So some more expenses to your bottom line on everything that you do, from gassing up to heating your home. So in summary, these are regulation changes that have been announced in advance of the federal budget. But also, there's a lot of inflation that's happening in our general economy. And I actually think that one of the regulation changes, which was the creation of the underutilized housing tax, is actually a great example of things that people should consider when we think about our administrative costs and our growing government expenses. Here we have inflation. So it's been heading in the right direction. You can see our 2% target here. Here was the peak back in 2022. We are trending down across all measures of inflation, which was very positive. What happened the other day, about 4 days ago, is the US announced that their inflation grew a bit more than expected, which kind of threw market participants off. The bond rate that we follow for the 5-year fix has actually increased. So the US, the stock market pulled back, the bond market increased, and we see that reflected in the 5-year bond yield. As you can see, here's January, it trended down, and then February was 3.75. We were at 3.79 earlier this year. That was at February 13th. It had dropped a little bit, but now it's climbing back up for April 15th here for 3.7. So it was looking like fixed rates had come down a little bit, but this week we're expecting fixed rates to bump up 5 to 10 basis points. So it feels like where we are with interest rates are going to be a little bit sticky. We can't really depart from where the US is sitting, because if the US stays strong or increases their interest rate, it's going to make for a very strong US dollar. And then everything that we import via our Canadian dollar is going to be even more expensive because it'll take more Canadian dollars to buy those US goods. And therefore it will cause inflation, whether we want it or not. I would say if anybody was thinking about seeing mortgage interest rates decrease this summer by the Bank of Canada and Tiff Macklin, I think that there's a very low chance that we're going to see a decrease, especially because we're currently in our spring market and it is a pretty active market with prices increasing. The Bank of Canada has a very, very challenging balancing act between trying to manage the economy and our import and exports and resources being priced against the US dollar and wanting to help our economy by lowering interest rates so people spend more. However, if we lower interest rates, prices will most likely increase further in the real estate market, as well as a stronger dollar will be helpful for a US export situation. But there's all of these balancing acts that Tiff Macklin needs to take into consideration. And I just don't see us diverging very far from where we are today, because really the US needs to get their inflation under control. In summary, we know that the market is driven by consumer confidence. It is definitely there. We've had our inflation decreasing, which is very positive and can give the Bank of Canada the opportunity to decrease those interest rates. However, while our bond market has increased because of the US inflation numbers and our interest rates are now starting to increase in terms of the fixed rate, they're probably going to be going up this week. It's not heading in that downward direction that has been helping, and we are getting the inventory that we so desperately needed. So it's a very interesting time. But in conclusion, we are seeing prices increase. If that's a function of people speculating that interest rates are going to be lower this year, that's a strong possibility. However, I think a lot of people are smart enough to know that they wouldn't be getting into the property market if they couldn't afford the interest rates that they had today. And the fact is there are enough people out there, there's enough demand that's able to get into the market. They're satisfied where today's rates are, knowing that at some point in time in the future, whether it's this year, next year, or a couple of years down the road, rates will decrease. And those people are entering the marketplace. It's not wild and crazy. However, I think that if we do see some interest rate decreases, we will probably see a more active market. However, with the caveat that, of course, the rate decreases aren't happening because our economy is going down the drain and people are losing their jobs, because that also has a negative impact on the real estate market. Anyhow, I'm Christine Kopr with Sotheby's Realty in Vancouver, BC. This is our April market update. If you have any questions about what to do in this real estate market, if you're thinking about selling your home or potentially buying a home, we do need to be prepared. You do need to execute the right plan for this market. And we welcome the opportunity to speak with you. Make sure you like and subscribe our Instagram channel, YouTube channel, and please reach out to us with any content that you would love to see us comment on. Thank you. Take care.